If you are a UK-based e-commerce retailer and are selling goods online B2C, that is to individual customers either in the UK, European Union or the rest of the world, then no doubt registering for and charging VAT is something that has played on your mind. In this video, we will cover a VAT overview for UK-based e-commerce retailers, VAT for UK-based e-commerce retailers in 2021 and beyond, what is Destination VAT, and finally post 1st of July 2021 simplification. So before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. This video focuses on the sale of goods by a UK-based e-commerce business, either as a sole trader or limited company, who supplies goods to individual customers known as B2C, as opposed to B2B, that is business to business, to the UK, EU and ROW, either directly or via an online marketplace such as Amazon FBA. At the beginning of April, we granted early access to the Accounting and Tax Academy membership site. In July of this year, we're opening our doors to everyone. Our members will have access to in-depth tutorials, free downloads, and exclusive discounts. And the best part is, it's absolutely free to join. Head to the link in the description box below to register your interest today. So as per the handout throughout this video, the VAT world is split into three geographies: the UK, the European Union, abbreviated as EU, and the rest of the world as ROW. From the 1st of January 2021, post-Brexit, all sales by UK-based businesses to customers in the EU and ROW, that's the rest of the world, will be classified as zero-rated export of goods. So let's illustrate this with an example. Adams Candles Limited is an e-commerce trading business based here in the UK. The company supplies candles which are VATable goods directly through its website to customers in the UK, EU and ROW. Adams Candles Limited is a VAT registered business here in the UK. In June 2021, the company sold a £100 candle directly through its WooCommerce website to a UK-based customer. As a result, Adams Candles had to charge 20% standard VAT on this sale, so that's £100 plus 20% VAT, which equals £120 of VAT inclusive sales. In the same month of June 2021, the company sold a £100 candle to a customer in the USA. So that's in our geographical region of ROW, rest of the world. So on the £100, VAT would be applied on the invoice as follows: the sale of goods of £100, VAT at 0%, given a total sale including VAT of £100. So even though the sale is zero rated, for each sale, Adams Candles need to display their UK VAT number on the invoice. And in this scenario, because Adams Candles are selling directly and not via an online platform such as Amazon, Etsy or eBay, the company has to register for UK VAT directly. If Adams Candles were solely selling through an online marketplace, then as a business, you should check your terms of agreement with the OMP as to who is responsible for administering VAT, which is normally the platform. Sales VAT is known in technical terms as output VAT, and zero-rated sales still need to be declared on Adams Candles' domestic UK VAT return when due, even if no actual VAT has been collected on the sales. In the same month of June 2021, the company sold a £100 candle to a customer in the EU, the European Union. Now, here's the important twist. The EU customer has to pay Destination VAT at the point of sale on this £100 candle. So what exactly is Destination VAT? Destination VAT is simply VAT levied in the destination country of the customer and the goods being sold, and it only applies to sale of goods to the EU, European Union member state countries. It's based on the destination principle, a concept of international taxation which allows for VAT to be retained by the country where the tax product is actually being sold. So let's assume the candle was sold on the 20th of June 2021. This is the point of sale and delivered to a customer in the EU member state of Germany, and therefore Destination VAT in this scenario is German VAT. At the time of this video, the standard rate of VAT in Germany is 19%. So this customer will end up paying £100 sterling converted into euros, let's assume at a 1.2 exchange rate. So €120 plus 19% German VAT, making a total payment for the candle of €142.80 on the 20th of June 21, the point of sale. Of this amount, the customer has paid €22.80 in German VAT to Adams Candles. So up to the 1st of July 2021, Adams Candles were needed to have been registered VAT in Germany in order to administer the German VAT. So just imagine if Adams Candles sold to 10 EU member states. The business will have needed to register VAT in 10 EU member states. So just to confirm, from the 1st of July 2021, Destination VAT will be due on all online sales into the EU. The current distance selling limits for EU suppliers will be scrapped. Destination VAT can be reported and paid in a simpler way via the new OSS, that's a one-stop shop VAT return, without the need for a UK business to register for VAT in multiple EU states. It is anticipated that you, as a UK-based e-commerce retailer, will be able to register for OSS in a member state of your choice. Make sure you hit the subscribe button and the bell notification icon to get notified of an upcoming explainer video that dives into OSS, the one-stop shop. I hope this video has helped you understand VAT for e-commerce trading a little further and taken you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video, or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us to get our content out there. This is Tony D'Angel for the Accounting and Tax Academy. Thanks for tuning in.